Welcome to this week's Cattle Call as we broadcast from the Nebraska Soybean Board studio, brought to you by Nebraska soybean farmers and their checkoff. Lots of things happening in this market. No surprise, we're going to talk a little fund roll of what's going on. The cash market, maybe some unevenness within this trade as we look north versus south, and heck, even what we're seeing across some areas of the north. And really, what's the tone in the beef? According to Brad Kooima, who you see on the screen with me, he doesn't like it right now. We're going to find out that and a whole lot more with this market. And Brad, I want to start out with this. You don't like the tone in the beef before we jump into the funds, because
good idea.
Something's got to set you off that you don't like what's going on.
It's like I got good news and I got bad news, right? And I not to overplay the hand on that beef question, but this is the first time in a long time you or anyone else have asked me, what's the beef business like? I've been able to easily answer, it's good, it's great, but it isn't great right now. And relative year on year, and of course last year was weird because we're coming out of COVID, right? But it's sluggish, and I don't think anybody that's kind of in the middle of business would say it's any different. I think some of the problem is our retailer, the farm to the end of the table trade is gotten out of hand. One of the big pushbacks I hear, some areas in the United States still have $6 hamburger, and America loves hamburger, right? But $6 is $6, especially when gas is $5. And so I think that's part of the problem. The middles are not in great shape right now for a second either, I'm told. Now, I'm pretty confident. When I say middles, I'm talking about strips, ribeyes, that sort of thing, which I'm going like, come on now. We always can sell strip steaks for Mother's Day. So I'm not sure if I'm going to buy into that whole story as we're going into warmer weather and Mother's Day, Father's Day, Memorial Day, all that shot here where the meat should be okay. But I wish it was in a little better shape. But I guess I'm going to blame somebody else, right? Let's blame the fact that I think that they're still trying to pass on some of this higher priced meat through the pipeline.
How long do you think that's going to last? I mean, at what point is the consumers going to put their hands up and say enough is enough, or have they already started?
Well, I don't like to be Debbie Downer, but I mean, let's face it. How good is our economy when you can't find anybody to work? How good is it when the cost of fuel is what it is? I don't want to be that guy, but I mean, to me, there's some stuff here that should make us a little bit careful. I guess I would like to think that there's still enough money in the consumer's pocket, but look at compared to a year ago or so. I mean, when they were getting a check every 15 minutes, right? I mean, I'm being sarcastic, okay? But I mean, with all that free stuff, it cannot help but make some difference in the demand end of the thing. Now, I still been a proponent too that there is plenty of supply as we move forward until we get into all the way through the summer, really, because of all the calves that went on feed last year, particularly the heifer calves, because of the drought. So I'm not, Brad Kooima is not thinking the market's going to $1.15 or anything like that. But I mean, you need to, when you're whipping a horse that's at 145, you need to have good news every day. So I'm just saying, hey, be cautious here, folks. The futures are telling you a little bit what their expectation of the cash market's going to be. And you can see the futures are at a steep discount.
So what's your thoughts on the fund roll that we're in?
I'm so tired of the funds being the market factor here. I could puke, but either you adjust or you get run over, right? Anymore with this small open interest that we've got in the cattle market, the funds are extremely influential and dominant. And what's happening right now, you're getting Rogers roll, pre-roll for the Goldman roll, which means that the funds have to move out of their long Junes to somewhere else. Now, typically they go to the next option back, which in this case would be August. I've noticed though now for several days in a row that they seem to want to go further back than that. That would make sense to me, which is a little scary because I don't really think like a fund. But you've seen a pretty nice increase in the open interest, Susan, in the December cattle. almost as if some of these fund managers saying, I think I want to skip the summer. Let's get back there where we think there's less cattle, probably where we think the influence of high price feed and maybe a little greener pastures, literally, maybe we'll hold off some of these cows and maybe even some of the heifer calves. And so you're seeing some of that roll, but you have certainly been able to tell the influence of that extra fund selling in the June, the last several days.
But what about this unevenness that you're talking about in this cash market? Is that something that's gonna see a pickup and an even out anytime soon?
You've got a tiered market, not the first time this time of year, but boy, it is really tiered this time. You've got a difference between old crop cattle, which there's almost none of anymore, the new crop calves, and then you have the whole difference between the north and the south, which last week was $8, $9 in some cases. I know someone that sold yearling cattle for $148.50 last week, and the south was getting $140. Last week calves were worth $146 here. This week they're worth $145 to $146 in the south. Looks like they're still going to be that $140 to $141. Some of this I think it's twofold. One is supply. The numbers in the north are tight. We talked about that for months, how we're going to be tight in April and May, right? And we are. The other part of it is quality offered. The grade of our cattle are much better, and when you have a choice select spread that's $12 and a consumer that wants choice, we should get paid a little more. Plus, you don't think that the fact that we negotiate for our cattle means that we might get a little more for our cattle too, perhaps? I know I believe that, but there are others that don't. But I think that those things are the reason why the north is premium. So,
can we say the saving grace, the excitement that we couldn't buy a raindrop even just a week ago, and now we have got ditches full of water in some areas in Nebraska and Iowa. We've got pastures that, should the temperatures warm up, are going to green up pretty quick. Is that the optimism that these cow-calf guys need right now?
Yeah, I think talked to one of my background customers, or that guy that I background with in central South Dakota, had 5.5 inches of rain. He goes, yeah, it came a little quick, but we're pretty happy to have it. Across the Dakotas, both North Dakota and South Dakota, a big area of Montana, people that I know there, some areas of Wyoming, it's still a little hit and miss there. But certainly the hope of greener pastures is very real, and it's a whole substance, right? I mean, it is what they do. We've talked about the cow kill, the second biggest since 2011. Last year, the heavy calf slaughter or heifer slaughter. So when this cycle catches, yes, when we finally, and one robin doesn't make it spring, like they've told me, I need more than just one rain. I get it, but at least it started, if we can sustain this pattern here where we can eliminate some of this drought for these guys, yeah, maybe we can finally start that expansion phase of the cow herd, which is a bullish phase for our fed cattle market for sure.
All right. Sounds good. Thanks for joining us this week, Brad.
Of course, you're welcome. Thanks.
Want to remind folks, commodity futures and options do involve a substantial risk of loss, not suitable for all investors. And that's this week's Cattle Call right here on the Rural Radio Network.